Sameer Baisiwala, who tracks the real estate sector, joins us now from the Morgan Stanley conference. Remember, this is the 16th Morgan Stanley Annual India Summit that's currently underway in Mumbai, and Sameer joins us from there. Hi Sameer, good morning, and thank you for being with us on the show. I was going through your morning. I was going through your report on the real estate sector, but before I talk more about that, what is your view on which are the listed companies that could benefit if and when REITs comes through?
I think the way to think about REITs is the companies which are generating rental income are the ones which are going to get benefited from this, and amongst the listed space, the companies which are well positioned for this are DLF, Prestige, and a little bit in Oberoi's.
Okay, Sameer, good morning. Thank you very much for joining us. Let me start with the main point you are making in your report itself, that the real estate industry appears to be at an inflection point. How much of a gain do you see? Why do you say that? And do you think the bad news is absolutely over for the sector? Are you going to see higher sales from now on?
I think there are three big reasons why we think that the sector is at an inflection point. The sector has been a big disappointment for investors over the last 6-7 years, as you would know. There were excesses in valuation, the balance sheets were not so well managed, and the cash flows were pretty low. I think all of these three problems have now been largely addressed. The valuations are close to the historical lows, about 0.6 to 1 standard deviation below their mean valuations. Second, on balance sheets, I think they have been fixed to a large extent thanks to equity injections and sale of non-core assets. So now we are looking at net gearing of roughly about 50% for the sector. But most profound is the new sales that these companies have locked up over the last 3 years, and that's a point I think that many are missing. So versus a $1 billion sales that they were doing about 3 years back, now they have doubled this to over $2 billion last year. And this is sales done from the marketing office but not recognized in the P&L, and this is something that's going to happen over the next 3-year period. So therefore we think there's a new earnings upcycle coming, and therefore an inflection point.
So in your interaction with all the companies, Sameer, which are the companies that have seen higher amount of inquiries and which will translate into higher sales, say, in the next couple of quarters?
Well, I think it's only been 3 weeks since we have seen a good news on elections. So yes, you're right. The inquiries are picking up, and that's more so from the top metros, which is Mumbai and CR regions. But for this to get translated into sales, I think this is going to take some time. Right now, the only there's been some sentiment improvement, and what this will do is get the marginal players or the fence sitters back into the market. But the real pickup in demand will happen when the real economy does well, and that's a few quarters away, I think.
Okay, to come back to the real estate investment trust side of the piece, how quickly do you think the companies that you mentioned will be able to benefit, and what is the extent of the benefit? Do you see their gearing going down? Do you see them being able to find better cash flows? Exactly what will be the P&L impact for the companies you mentioned, DLF, Prestige, Oberoi?
I think these are very early days, Lata, very frankly, and there are many things that needs to get readjusted for REITs to become reality. It has to be capital gains tax, it has to be income tax benefit, it has to be dividend distribution tax. So we need to wait for the fine print, but as and when it does happen, I think what it does is it gives them a lot more liquidity. So the rent yielding assets which are right now sitting on their books will get more liquid. The companies will be able to list these on the stock markets and get liquidity inflow because of that. So it probably will not have too much impact on the P&L side, but would ease out the balance sheets a fair bit.
So how much could, if you've done any kind of assessment, Sameer, how much could the capital value of these rent yielding assets increase by? Some ballpark figure?
Well, I would say if today, if I were to look at the listed space, then we are looking at roughly about 30 billion rupees in total rental pool. And if I capitalize this very roughly at about 10%, and this rate can fluctuate a fair bit, so then we are looking at a pool of roughly 300 billion in asset value.
Okay, let me start with your stocks one by one. What kind of price targets do you have, for instance, in Soba and in Oberoi?
I would not be able to discuss stock specifics, but I would definitely say that we are quite excited about the new beginning, as I mentioned before, that we see for the sector as a whole. And what we like in the sector are really the mid-cap stocks, and these are the ones which are going to deliver on the three parameters that I had earlier alluded to, which is valuations, balance sheet, and the pre-sales. And these are stocks to watch out for.
Okay, I have two more questions for you, so I'm quickly going to run them through you. One is, you know, in your assessment of all the companies, where do you see the biggest balance sheet pressure easing? Which are the companies that could see major either asset monetization, debt reduction, etc. in FY15?
Well, I think this is a process which has been underway last 3 years, which is easing up the balance sheet through sale of assets and deleveraging. And I think a fair bit has already been done. So there's not an awful lot that we are expecting to happen. So fiscal 15, I think that trend, whatever residual amount is remaining, will get done, and that's pretty much across the board.
Okay. Well, you know, one speaks of a return or a continued sales only in the Bengaluru region. Are you seeing, you know, residential sales improving in, say, the Mumbai region or the NCR region as well?
Well, I think these are three key markets, as you rightly said. Bangalore has been the most stable and the most disciplined in terms of pricing, and so therefore it has benefited from higher and better volumes. I'm looking back 4 to 8 quarters. Mumbai comes the next, and I think the sales have been flattish. They have not been growing, and I think if one market has to see the delta, then probably it may well be Mumbai in the quarters ahead because of the new optimism and a recovery in the economy. And NCR is probably lagging behind the most. It had seen the so to say not so well disciplined price increases, and that's where we are seeing a lot of volumes coming off.
By the way, Sameer, just hold on for a second. We need to get some attention back to the markets because the Sensex has suddenly tanked about 150 points. The Nifty 2 has taken a turn for the worse and is now down about 0.5%. And it's the private sector banks that are actually dragging the market at this point. So HDFC Bank, ICICI Bank, IndusInd Bank are all down about 1 to 1.5%. And some oil and gas names like ONGC 2 are dragging the market at this point. So that's, you just keep an eye out on the market.
Yeah, actually even Mahindra & Mahindra, Punjab National Bank, quite a few heavyweights in the index are dragging at this point in time. And maybe you want to pull up the mid-cap index as well. It's just about holding on to the green. Even there has been a significant amount of sell-off that we are seeing. But practically all the sectors are in the red. Sector-wise, it's only metals that's holding on to its gains. Otherwise, and of course, consumer durables is a fairly stable performer. But otherwise, we are seeing a decent amount of selling in the IT space, but more importantly in the oil and gas and bank space. That's where the selling is coming. Just a spot of bother. Indexes, Sensex is down over 100 points.
All right, Sameer, just a final question to you. DLF has seen a big gain this year. The stock is already up about more than 30% for the year, despite the NCR region being sort of slow for the past many months. Do you see any further fundamental triggers for DLF to appreciate incrementally this year?
Well, as I said, I will not be able to talk about the stock specific, but as we have been talking about, the sector should do well going forward here on.
All right, Sameer, thank you very much for joining us with your thoughts on the sector, which is now hot and happening.